Good morning, traders. Paul here with GammaEdge. Today is Wednesday, the 31st of May. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Summary for today, we're whipsawed back to this red or orange state. Our short-term market models have flipped bearish on the 0DT and 1 to 3 day swing timeframes. We get that from the CT, the cumulative tick closing below the previous day. This is a trigger day down. It is a whipsaw, 1 day up, 1 day down. And then something we call the railroad track pattern. You'll see that on the next slide. It reversed, and it's awaiting confirmation. It's on the sidelines right now. It's a whipsaw, meaning we could go up, we could go down. We don't know, nor do you. Long-term market model is bearish, remains bearish. We will show you, though, that the tick SP, which is the cumulative tick on the S&P 500, actually did, in a long-term sense, move to a bullish condition yesterday. Not predictive. You will see it is horizontal, and when a trend line is horizontal, what does that tell you? Survey says no trend, so be aware of that. Transitions. We closed right back at 42.05, virtually unchanged. The lower transitions, 41.75. That really becomes the line in the sand for the SPX PM complex. 4200 is the upper transition. Would not be surprised at all to park somewhere in this zone. We are also watching the development of a 4105 node that bears watching overall. The challenge with that is that if we continue to see weakness in the markets, it's possible that we could pull lower, and that would be a sweep node just above the 4100 line. Minus GEX remains at 3900, plus GEX at 4300. There's little fear from 3900 towards 4200, so be aware. Normally we would see a different presentation, and we'll cover this in the landscape slide, which is the next to last slide of the deck here. The SPX combo, despite all the bearishness, it is still called delta dominant above us, which means the calls are in control. And below us, we are called delta dominant. And net GEX increased relative to yesterday. So even though we pulled back to that 4205 area yesterday, net GEX, which is short-term call dominance, actually increased in the overall complex. And that, in general, is a bullish type of setup. So just be aware of that. For the 0DT folks, guidance here today, we have a large open interest expiry today. It's the end of the month, the end of May. And as a result of that, it is potentially going to incite some downward pressure because it is net positive call dominated. When we close calls, we tend to put pressure on the market as the dealers unwind their hedges to compensate. So we wouldn't be surprised at some downward pressure. Excuse me. 4200 is the 0DTE P-Trans. That's up one strike from where it was yesterday. The 4195 line is N-Trans. That also is up one strike. Why is this important? It shows that puts are falling in right underneath us to take advantage of some short-term convexity, but the magnitude of these are extremely small, and because it is the 0DTE, really are not having a major influence on the overall structure. The upper charm strike that we're watching is 4230, and it does give us a runway all the way up to 4250, but the predominant line builds up to 4230 and then pauses somewhat. If we do take 4230, we could drift upward towards that 4250. We don't think we're going any higher than 4250. In fact, we're not actually expecting to go much higher than 4230, if anything, today. Lower charm strike is 4190. This is the JPM expiry for today. We have short calls and long puts coming off there, and that's what makes this a large dominant line. We could easily head lower if we push below this, but just due to pinning and things related to that, we don't think that's going to happen. As always, we want all the Discord users to watch the command value SPXP, which is our own symbol for watching the PM settled in isolation for targeting above and below. Turning our attention to the cumulative tick, this is the tick RC, the ARCX model. What that is the New York Stock Exchange, the NASDAQ, as well as the Amex exchanges, all wrapped into one cumulative tick index. It backtests very well. We use it as our primary market model. And what it's basically shown is another whipsaw. So although we had 3 good solid down days and we've had a long-term confirmation to the downward side, we are indecisive on what we call the railroad track pattern, and the CT did close lower. So just be aware, it's a tough model right now, and so play this accordingly with your appropriate time frame. Did want to highlight the tick SP, which is the S&P 500. So this is just the tick count on just the 500 stocks that comprise the S&P 500. Your eye probably sees the colorful ribbon in the middle of the page. You can see that it's horizontal. When you have a moving average ribbon that is horizontal, that tells you there is no trend. And so just be aware of that. Now, that said, because the white bolded line, which is the cumulative tick, has pulled above, we have now transitioned again to a positive condition overall. So as long as the white line remains above the ribbon, this will be indicating to increase our long exposure. But of course, don't get out over your ski tips. Do not get oversized. This is not a call to go all in on the bull side. It is just suggestive that the S&P 500 is bullish. Maybe your stock is not correlated with the S&P 500. And as a result of that, play it accordingly, but just be aware we do have 2 divergences. You've got the whole market here, the tick RC, and then you got just the S&P 500 here. They are not conformational. They are conflicting right now, and that is just kind of the status quo for the markets, as we very well know. Taking a look at Gamma here, this is the PM settled complex for the S&P 500, the SPX. Effectively, you can see where we're at. The 43.20 up here is the JPM strike for the end of June. Right, July is sitting even higher at 43.65. You can see those short calls are popping through, and probably until they get neutralized, are representing the upper range of any market movement to the upside, at least for the short term, right, over the next couple of weeks. To the downside, you can see where transition is below the yellow line, indicated here clearly at 4200 being P-trans, and then 4175 being indicated as N-trans. Falling into this range would not be a surprise for today, just because of the way it works. Taking a look at the 0 DTE, very clear definition here. 4200 is P-trans, 4195 is N-trans, and look at the dominant line at 4190. Again, this is the JPM strike for today. These are short calls, approximately 6,300, that are going to collapse and get rolled. Actually, they're not going to get rolled. They'll probably be allowed to expire worthless. They may get rolled. There's a couple different scenarios. We'll just have to see. If we pin around this strike, which we want to do, we would expect that once this is gone for tomorrow, that given the overall structures that we're seeing, do support an upside move. If we drop below the 4175 today, we don't anticipate it, but if we do, then we could have a sentiment change within the overall structures, and we would have to be very, very careful. The 1 DTE structure, pretty important here. You can see 42.45 is in play for tomorrow, but I want everyone to pay attention up here. 106,000 contracts for a Thursday expiry is a week expiry. Just be aware of that. We're going to need to see a lot of targeting for tomorrow on that expiry, so watch the value command again. To the downside, 4190 for tomorrow. That has nothing to do with today. You can see is present, and you can see all the way on down to 4165. So this is starting to show a little bit of build, a little bit of expiry into the remaining part of the week, and that can be important. Just note the net expiry for tomorrow is call dominated. Typically when we see a call-dominated expiry, we're seeing a little bit of downward pressure, so just be aware of that. So again, watch for targeting using the value command, and we'll get an idea of what to play intraday. Looking at our crystal ball, balance of week, it's just really a composite of today, tomorrow, and Friday. You can see very clearly what's in play here. I'm not going to comment on this. Pause your players here, and you can review this. We are starting to see a little bit of weakness, I guess, across the board down below us as well as above us. The 4250, for instance, the 4165, and then, of course, the 4190 because of all those short calls that are coming off today. More importantly is next week. So this is a view where we turn on the expiries for next week and we just take a look up and down the strike chain, and you can see that we're starting to see a little bit of weakness in the money calls that are below us. We're seeing some of that red delta there, which indicates that the out of the money puts are present. Now, this is expiries for next week, so it's going to be path dependent, right? When do these come off? And I'm not going to go into that analysis today. The key takeaway for us, though, is 4,200 is a clear line, and coincident with that line, you can see the green dot at 4,200. That is the call open interest. That is the dominant call open interest for next week. And when we see that much lower than what we've seen this week, it does give us a sense of a pause, and with plus GEX up at 4250, that's the green dot to the left here. You can see that we now have some speculation to the upside, no question about it, but the dominant calls for expiry next week are below that. So this is going to put some downward pressure. Typically, we like to see plus GEX and COI leapfrog each other as they go up, not as they come down. So having COI, having COI drop for next week is somewhat of a storm cloud on the horizon, and we're going to want to pay attention for next week. Also adding fuel to that argument is to the downside. 4,100 is now the short-term minus GEX. Remember what I was saying earlier about 3,900 being the overall complex minus GEX. When we see the 4,100 line start to appear for next week, this is showing short-term targeting to the downside, and your eye should see very clearly from where we sit right now at 4,205 that 4,150 has got a dominant put strike for next week, as well as the 4,100. So there is positioning next week for the downside. It's just not dominant, and we're going to watch to see if these grow and what happens. Taking a look at the combo complex, despite all the negativity there, want to just say the combo complex as a condition, as an overall state snapshot, however you want to describe it, is very, very bullish. To the north, we have a lot of green deltas with significant magnitude, right? So the out of the money call speculation above us is solid, and you can see all the way up to 4,300 how it grows. Below us, again, the delta column is green. These are in-the-money calls, and the in-the-money calls on the delta side are really showing their support. They're going to just continue to grow. They have a positive charm, and the out-of-the-money puts are not really playing a role here, not at this point. Transition, very clear, 4,200 to the upside. To the downside, we're sitting at 4,175. So there you have your lines in the sand, 4,200 to the upside, 4,175 to the downside. Transition between there, it's going to be noisy. We can play in there. Don't get panicky. Don't say the market is going to collapse if we fall into those areas. And remember, 4,190 is the JPM strike for today. So we could very easily pin around that, and I would not be at all surprised. The final view here is this. Just be aware that right goalpost 4,300. It is still targeting. It is abnormally large with 52,000 contracts sitting up there that have that dominance, are contributing to that dominant expiry or dominant line, To the downside, the left goalpost is 3,900. Again, this is the combo structures, which are the AM and the PMs. Why this is important for you is you can see that red line which slopes towards the zero line, right? And why this is important is this is not the way we normally see anticipation of a downward move. Actually, we would expect that the, say, 4,100 line would be of the largest magnitude, and then it would taper off just like the 38, 37, and 36 lines do. We're not seeing that. So although there may be some short-term anticipation next week of some weakness, the broad market is not positioned right now to absorb and continually absorb a downward move. We feel that absorption is important because as the market falls, puts are monetized. That adds liquidity to the market, and that can actually cause us to rebound. Right now, if the market falls, certainly there are puts present. They will be monetized. But if the market continues to fall, we typically don't see a lot of puts in the money puts or at the money puts being added as the market is falling. That's when liquidity gets pretty poor, prices move down pretty aggressively, and that's usually not the time that we see puts being added. That's when we could get into a little dicey situation. So we are mindful of this. We are not saying in any way that the markets are going to collapse. We're saying basically they're not positioned to absorb a long duration type or a significant move down besides that first wave of push downward. Once those puts are monetized, we'll have to see what the structure looks like, but right now it is not a traditional setup. The upside, before we go here, just want to show the 4,400 line. Now remember, we're at 42.05 in spot price, and Gamma is very sensitive to spot price. So the fact that the 4,200 line is showing 27,000 contracts, but the 4,400 line is showing 32,000 contracts and is bigger, just gives you a sense of what people are positioning to the upside. So, we have a market. We have storm clouds on the horizon, but we also have a lot of upside potential in play, and clearly the market is focused on something to the upside. So with that, I will bid you farewell. I know I spent a little more time here today. Come into GammaEdge.us, click on that web link, and go to the upper right-hand corner, fill out the pricing link there, and come on in for a 14-day free trial. All the tools turned on. On Twitter, follow us at GammaEdges with an S, of course, and then here on YouTube. Two things. If you like today's commentary, give me a thumbs up. It gives me immediate feedback that I'm providing content that you find useful. And, of course, subscribe so that you get notified when we post videos and show you what we're seeing. So with that, bid you farewell. Hope to see you in the Discord. Thanks, everyone.